All right, so this is forming a fair value gap right here. And I see it's entered into that space here. There's no fair value gap being formed here because there's no gap. I'm going to see how this black candle reacts. Also, there's this large green candle that was formed after 7 a.m. That's a good indicator that price wants to go up. There's this gap here, and price is going in. It looks like it's trying to go up. And then this is the liquidity line that price went underneath. So to me, I would enter into a buy here. Minimizing this. I would buy, I would draw my stop loss underneath here, but might take profit maybe at this line, maybe at London line. And this is NQ. Do the same thing over here. MNQ. And I would do buy. I'll draw this underneath. Draw this as my take profit up here. Go back and watch price. So I'm focusing on the NASDAQ because even though both of them went down underneath this key level and reversed up, this one did not give me a fair value gap. This one did, right here. This had a really good candle as well, but there was no fair value gap, so I kind of left it. This obviously has a break of structure right here. Or this high, the high of this candle, you can see this candle closed above it. You can see this fair value gap. You can see liquidity happen. So I took a trade on NASDAQ. And I'd previously drawn the London high, London high, London low, Asia high, Asia low. So ideally, I can use those as key levels to get out of the trade. If price keeps going up, I can take my trade out here, or I can take my trade up on the London high. But right now we're in the trade. And we're in this trade. Looks like volume just kind of slowed down. Had this big green candle, now every candle is kind of not as big. Price is moving up. This was a relatively high that I drew in the 6 a.m. because I was trying to figure out if price was going to go up and down. And then I drew relatively equal lows to see if price was going to go down and then up. Looks like price went down and up. That's liquidity. Then I drew this box here when the fair value gap was created. I noticed this really large green candle was created as well. And there's a break of structure, meaning that this candle that was made is higher than the last high. So that gives me indication 3 times that price wants to go up. Liquidity shows me it wants to go up. This big candle closes above this last high, shows me it wants to go up. And this fair value gap candles came in and went back up. That lets me know it wants to go up. So I enter into the trade. I always look at the NASDAQ and the ES together to see which one to get into. And comparably, between the two of them, I went into the NASDAQ because there was a fair value gap. And this one did not have a fair value gap opportunity. Also, this one showed a break of structure before this one showed a break of structure. This one is just now trying to show a break of structure, where this one already did at that 701 candle. So this showed itself a lot faster, and so I entered into this trade. So if I only entered in with one contract. So the smart thing to do would be if price hits this Asia high to just get out, or if it gets close enough and it starts making a gray candle, I can get out as well. But if the candle that's forming ends up kind of closing above this line, even though I have one contract, I might just want to stay in because there's another key level up here, which is the London high. So it's a matter of how the candle reacts to these key levels as well. That helps me determine. Right now it looks like it's trying to form a gray candle. Sometimes this is where people who scalp, who go in and out of the market, if price gives them a good green candle like this, they'll keep going. And once they see a gray candle, they might just exit out of the trade and say, look, at least I made 265 bucks. I'm good with this. I scalp sometimes, not always, but I don't know. It just depends on what the candles start to look like. Right now it's 7:10, so we're still in a good window. And the way this candle is big, kind of indicates that price wants to keep going up a little bit, at least to this line. This is the Asia line. It could also go up here. Let me change that color, because this is another key level where price goes up and changes down, or this is a swing high. Now price has crossed over this Asia, so I could easily just get out. Depending on how the candle is, I can close. I might just get out. So I went ahead and got out of that trade. I think I was thinking of getting out of this trade. So I entered on the prop firm, just 2 contracts. I'm going to move this stop loss underneath so that no matter where this price goes, I can still make $52, it looks like, on here. If price wants to keep going, it can take it all the way to this line and make $149. Right now, I'm at 87 bucks with this trade. So price ended up hitting this key level, which is 1, and I think it was 200 something. The reason why there's a difference in the price is because it was 200 something on the NASDAQ because I used the NQ, but on my prop firm I used MNQ, which MNQ is basically, if NQ is 1, MNQ is a quarter of that. So if we're trading 100 bucks on NQ, then MNQ is going to be $25, the same number of contract. So I want to keep staying in this trade for now. So I'm just dragging my stop loss. And instead of leaving it here, and in case price comes down, it will come down and take me out. I moved it up here, and it looks like it's about to hit it. And that's fine. It's getting close. And it's because it's a 7 a.m. 7, oh, okay. Order filled. So I made $69 there. On here with the demo trade, I made 200 and something. Orders, I don't remember. Made, I don't know. I can't see. Order history. I'm not great at looking at this. Okay, $330 is what we made taking this trade, and that's just based on the size. But everything, this was considered an A plus setup, and if I wanted to, if I like was really focused and not in a hurry with work or whatever, could have stayed in this trade. I would have entered in more contracts, like 2 or 3 contracts, and when the first contract or the first candle hit this red line, I would have taken one contract out. I would have taken one contract out, left 2 more in to see if it would hit these key levels. So far, it's still going up. I know you're just joining, good morning. So I was just going to say, the way I set this trade up, this line here is 7 a.m. I looked for relatively equal highs over here, and these highs are kind of relatively close to each other. They're not perfect, but I drew a yellow line there, and these lows are kind of close in there, like where they stop. So I drew a line there, and I call it a relatively equal low. So I drew those because price, it was either going to go above here, since it's 7 a.m., this is our kill zone time, or price was either going to go underneath here. So I watched the candles, and price actually went underneath here and reversed. So once it reversed, that's my liquidity. Then it made this gap between this green candle and this third green candle was a gap in between. I put this box there to see if this fair value gap would be honored. And once this candle entered in and closed, I entered into the trade. I also noted that there was a break of structure here where this big candle closed above this last high. So we have liquidity where price reverses at 7 a.m., which is our kill time. We have a fair value gap that's formed. We have a break of structure where this green candle closes above this. And this is a very nice large candle, which is a bonus. We have 4 reasons to enter into this trade. So I entered into this trade once this candle got out of it. And I took the trade up to this Asia high or low, this Asia line here. I only entered in with 1 contract, so it made sense to just get out here. But ideally, if you entered in with 1, 2, or 3 contracts, once your price hit here, you could sell 1 contract and leave 2, or you could sell 2 contracts and just leave 1 to see what it does in this trade. But now it looks like price is trying to reverse back down. Again, this is a key level. So every time price hits a key level, it has an opportunity to reverse back down in the opposite direction. The reason why I did not take a trade on ES over here, I didn't take this trade because there was no fair value gap, even though there's liquidity here. There's no fair value gap, and break of structure did not happen at the same time as it did here. Like the break of structure took place here faster than it did here. And the fair value gap was formed here before it was formed here. Now, if you want to take a trade, you can see that there's a gap between these 3 candles, and a candle has entered in. So you'd have gotten into this trade by 7-11 and made profit somewhere here. But between the 2 of them, I was looking for which one provides the best opportunity, meaning it provides the best confirmation quickly, and NASDAQ presented it faster, so that's why I entered into this trade. So I'm already out of it. I took a trade here, and I did it on my prop firm on a MNQ, which is a smaller account, but it's the same NQ, just a smaller rate. So it was a $69 profit there. Yeah, It's likely that price may continue to go up, but this is just a super simple trade at 7 a.m. We don't have to use too many confluences or confirmations. We just do it like that. I know I don't. You guys didn't log in before 7 a.m., so I figured you guys haven't had time to pull up your charts. But any questions, concerns? I know you're also getting ready for the day. Any questions? You guys are muted. You're able to talk if you want to.
Oh, I didn't know we could talk.
Yeah, I was able. I
It's-
realized that like 2 weeks ago that it just shows me an add button, and I'm like, oh,
Mhm.
okay. And then I add you, and I added Brittany, and she started talking. I said, okay, perfect. She's like, oh, I didn't know we could talk. I said, yeah, I did. Me too. I just figured that out. Yeah. Any
Wow.
questions? Does it make sense? A little bit. A little bit.
Yeah, a little bit. It makes sense. Yeah. Mhm.
Um, yeah. If you like, let's say you were free at the time, and you opened up your trading view at the 6:45, we would have drawn these together. So
Mhm.
you can see this is a low, this is a low. We draw this line. But then when I saw that price started to make these candles even lower, I said, okay, this could be another relatively equal low. It's not perfect. Clearly, it's not the same level as this, but it's
Mhm.
still close. So I drew, that's why there are two lines here.
Mhm.
And then once 7 a.m. reached, all of a sudden the candle just went underneath. You can see the candle, green
Mhm.
candle, stick underneath this yellow line. I said, okay. So that just shows price went underneath here and
Mhm.
reversed back up. And especially with that, with this very large green candle, that just gives you the signal that price really wants to go up when it gives you a large candle like this. So you just wait. You wait for break of structure, which this high and then low. You draw a line and you wait for the candle to be above the same. And sometimes these are happening at the same time. Things are
Mhm.
forming, which is actually perfect. You kind of want there. This is actually considered like an A plus setup because everything is exactly how it's supposed to be.
Mhm.
Price does the liquidity right at 7 a.m. perfectly.
Mhm.
Then there's this very large candle. Like the large candle is like a bonus. It's not always needed, but it really does make everything more like, okay, I have all the confidence to get into this.
Mhm.
And while it's being formed, it's also getting higher than the last high.
Mhm.
And then it's in its same forming, it's the next candle over creates this fair value gap. So everything is like boom, 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 right at the same time.
Yeah.
So then you just, and it's important to like get in at the right time. Like once this candle entered and finished, see
Mhm.
this blue arrow here is showing that this is when I entered. This is the perfect time. I would
Mhm.
hate to have entered here or here or here and you miss the opportunity to make anything because it's too close. So everything is about timing and getting in at the right time. So once this candle closed, I entered in on it, or as it was closing, I entered in on it
Mhm.
because it met all the A plus setups. And this yellow line was no longer, was not a line that I would consider taking profit. It was a line that I used to do the relatively equal highs, but I just left it there for demonstration. What I was really aiming for is this red line up here as my Asia high that I'd already drawn from 1800, and then this blue line and this white line in between. Um, but you can see if you would have stayed in this trade and said, "Nah, let me keep my one contract and see if we can just shoot for
Mhm.
this thing," you would have started losing money. And you would have still made, but it wouldn't have been much from
Mhm.
the time you entered to here. So that's why I'm like, once the candle just tick this line one time,
Mhm.
you remove your money and just take your profits and go. And then we'd wait until 8 a.m.
Mhm.
I won't be able to do 8 a.m. because I'll be trying to get back to the hotel and leaving here. But
Okay.
we can do the same thing at 8 a.m. for sure. But I would say the reason why I'm not even interested in 8 a.m. is because there's 8:30 news. And
Mhm.
even though the news comes out at 8:30, there's no reason to like try and get into a trade 8 a.m. and try and
Mhm.
get out at 8:30 because you don't know what time trades are going to end and start. Yesterday, this trade did not happen until like 7:20, 7:30.
Mhm.
Today, this opportunity presented right at 7:02. So there's no reason to take the chances of 8 o'clock and hoping that it will. Nah, just leave it and wait until 9:30 when we have a real good volume and we have a really good opportunity, and we can take another trade then.
When you say 8:30, 7 a.m. our time, right?
No, 8:30 our time. Sorry, 9:30, because 9:30 is when New York opens. I apologize, going back and forth because a couple people live on the East Coast. So 9:30 is when we take a trade. The entire world takes a trade at 9:30 Eastern. But since we are Texas, it's 8:30 for us. Yeah. So yeah, instead of, and then this 8 o'clock that I'm referring to is 7 our time, but 8 a.m. New York time. But the time that we're really going to take a trade is going to be at 9:30. That will be the next time we'll take a trade. And you can see price wants to keep rallying up here. Even price over here, this fair value gap, it's respecting it and it's trying to go up. So this trade, you can enter in 2-3 contracts. The more you enter into this trade at this time, or you know what I mean? When you get used to like seeing this, now this is like day 3 for me, entering into this trade, making money off of it. I'm not saying it happens every day, but when you get used to like, okay, step 1, step 2, step 3, enter into the trade, you start to get comfortable. Okay, instead of just doing 1 contract, let me do 2. Instead of doing 2, let me do 3, because everything is, my checklist is making sense. So
Right.
yeah. So that's it. We'll reconvene at what time? 9:30 or 8:30 Central Time, 9:30 Eastern. Yeah.
Hold on, just quick question. That liquidity, right, where you entered. So you said because it passed the previous high, that blue line, right? So that's always going to be how we determine the break of structure.
So there's liquidity and there's break of structure.
Mm-hmm.
So are you asking about liquidity down here or break of structure up here?
Break of structure.
Oh, okay. Break of structure is, you have this high
Mm-hmm.
and you have this high, I know, up here.
AJ,
Just
Yanni,
the close circle.
come here. Mm-hmm.
And then you have this lower high. It's another high, but it's lower than that. So, and this high and then this lower high, that usually means you're going down, lower highs.
Yeah.
So for you to know that I'm going high, I'm going up, I need a candle to close above this one to tell me that we're no longer going, I'm not forming any more lower highs past this. I'm actually going to be forming a higher high.
Brother. Mm-hmm.
So that's where you can say, okay,
Mm-hmm.
this is the last line here. I need a candle to close above this line, proving to me that we are no longer making another lower high. We're actually going to start reversing and making a higher high. So once a candle, it doesn't have to be this one, but this is a perfect candle to do this. It could be this one. This one did not even close above it. Maybe it's this one. Okay. See this candle here and the whole body. Don't mind the wick. You're looking at the body. Just looking at the body. It's above this high. So that's what tells me, okay, price is telling me it's definitely going up. There's no more, maybe it wants to go down. It's closed above this high. It wants to go up. That's your break of structure. That's telling you we're changing direction. We're no longer making lower highs and lower lows. We're about to start making higher highs and higher lows. We're changing our direction.
Okay,
That's what's happening on this one.
Okay, got it. Thank you.
No problem. No problem.
All right, now.
Okay. If you're able to, we'll do the 9:30. This WAP actually records all of these, so I'm just gonna put it into the WhatsApp as soon as I think I can process it. I don't know how this thing works, but I think this is better than that Google Meets. The Google Meets is like lagging somehow, but this, when I see my mouse moving, it doesn't look like this staccato delay. Everything seems to be smooth. So this might be better for the streaming, anyways. But okay, we'll see. We'll see y'all at 8:30 Central, 9:30 Eastern.
Okay.
I'm gonna bye. All right, have a good morning. Bye.
Thank you.
Thank you.